All right, welcome to Mine Explorers episode 79 with special guest Rick Rule from Rule Investment Media. Welcome, Rick.
Pleasure to be with you. Thank you for having me on.
Yeah, it's exciting. I've been listening to you for a really long time, at least 20 years since we got into the mining industry. And
We have some people in the office who are also huge fans. So
yeah. One of our finance director, Chris Gunther, who's been on the show a couple of times, he said he's been a fan since the 90s. And thanks in no small part to your guidance and advice over the years, he's done pretty well in investing, and he's stayed in the resources industry, which enabled us to get him to come work for us, which is always great.
well, it's great too because we can pick his brain on the resource sector of like, okay, so I know we're in the space, but also, what's your opinion of where we should invest? So
Yeah.
it's fun.
Well, I'm delighted that he feels that my efforts benefited him. It's gratifying over the long term to interact with a lot of people from the mining community who have benefited humbly from the mining community and less humbly from my attempts to describe it.
Yeah, fair enough. So what about, I'm really curious, Rick, to know what about the mineral resource sector that really draws you into the investment side? Like what about it is that's like, I'm going to put my money here as opposed to, the other millions of opportunities that are around?
I came to it as a consequence of three mistakes. The first mistake was that as a young man, I liked the outdoors. And I came from a family that had some background in agriculture and oil and gas, and I assumed that going into extractive industries would lead to a career spent mostly outdoors. And I've been trapped in an office ever since. So that was a mistake. The second is that and this isn't a mistake, I guess, I learned a lot about soft rock geology. I really started off in oil and gas finance. In the early part of the decade of the 70s, I became useful to people in financial services because although I didn't know very much about hard rock geology, I was tough to lie to.
Gotcha. Yeah.
I utilized whatever expertise I had in soft rock geology and hard rock geology, and although I wasn't particularly good at it, I was better than most of my competitors who were unreformed used car salesmen.
Right.
The third is that in 1970, I made the fortuitous decision to emigrate to Canada. I did that for two reasons. One, the University of British Columbia had the only then effective or existent program in natural resource finance, which I wanted to take. My aunt was a professor there, so I was familiar with the University of British Columbia. And two, in 1970, a young American man was going to travel. I considered my alternatives. They were Vancouver and Saigon.
Yeah.
And Vancouver seemed to be at least more benign than Saigon.
Right.
Both places had lots of pretty girls, but in Saigon, they shot at you.
Right.
Vancouver, they were at least a little less hostile. So as a consequence of those three things, I had the very good fortune to relocate in Vancouver at the very beginning of the epicenter of Vancouver's 1970s exploration boom. Vancouver itself became the epicenter of, for better or for worse, speculative exploration finance. And again, through an odd set of circumstances, I had to work my way through university. And that work ultimately ended up in my owning a bar in downtown Vancouver, which was the epicenter of the epicenter. It's where the mining industry and the financial services industry talked to each other, or at least slurred at each other after hours. I joke that I went to school during the day and I heard poorly paid people tell me about the way that they hoped that the world worked. And at night, I watched very wealthy people who actually described to me the way the world worked, albeit in the evening, those experts were somewhat addled by the product I served them.
Right.
Fascinating.
Wow. Yeah, it's a common theme on this show. One of our first questions we asked everybody is, how did you end up in mining? And it's a really common theme that
No story is ever the same.
there's a common theme that everyone wanted to be outside. I wanted to be outside. And that's a really common theme. And it's interesting because some folks ended up doing exactly that, and some folks ended up staying inside more, or different parts of their career they kind of alternate from outside, inside, outside. But it's kind of that common theme of being outside. But I mean, talk about timing, being in Vancouver in that time period, and then it's no joke. The business gets done at the bars at night there, so you were right in the middle of it. That's very cool.
It's hilarious when I look back. Customers include, well, particularly Peter Brown, Canaccord, but Gus MacPhail, then of Continental, which became Yorkton.
Yeah.
Murray Pezim, a real name from the past. I had the good fortune of being introduced by Peter Brown to a guy named Bill Rand, a prominent mining lawyer, who then introduced me to his favorite client, who was Adolph Lundin.
Right.
The idea that I was able to begin a deep association with the Lundins at the ripe old age of 21 will tell you just exactly how lucky I was to locate in Vancouver.
Yeah.
That set of fortuitous circumstances could not have occurred for me anywhere else on the planet.
Wow.
Yeah, that's amazing. And what a group of guys. And the Lundins, I mean, they've gone on to do so much even still. We get to work with one of our partners that we do some prospect generation here and there with, is Ted Posey, who was one of the first,
Sure.
the inaugural president of Lundin Mining. And so he's got all sorts of tales, and similar to your experiences, the more whiskey he has, the more tales he shares with us. So
I think it's important to note right here in this conversation that it's unusual that the third generation of a family like this is as hardworking and humble as the third generation of Lundins. It's useful to note that Adolf, the scion of the clan, spectacular human being, by the way, just a spectacular human being, was succeeded by two sons who were hardworking, brilliant, and humble. And the third generation, this is almost unheralded,
yeah.
exhibit the same traits. The third generation, by the way, credit their now deceased grandmother, Ava Lundin, as being the glue that held the family together, but also the one who drilled the competitive drive into her grandsons, challenged them to cross-country ski races in Sweden, where she wore a skirt and goaded them to beat her. I mean, just a unique family.
Yeah, it is. That's a great point. It's very rare. They talk all the time in business about how the first generation builds it,
Yep.
the second generation runs it, and the third generation destroys it. And so
Yeah.
for it to continue like that it means there was definitely some sort of glue somewhere, whether it was values very heavily instilled or some sort of processes and systems that keeps things going. There has to be something there. So that's really interesting. And it's good. I mean, we need people like that, especially right now. I mean, we're entering some really fascinating times in mining. I mean, it is, every week I read headlines that I would be excited to read spaced out 6 months or a year, and they're coming on a weekly and monthly basis right now. It's exciting.
I think that's accurate. And I think the underlying theme is also important in considering the Lundins, which is to say the dearth of a third generation, irrespective of competence. In 1970, when I went to the University of British Columbia, the incoming class in what was then called geological engineering was something like 200 students. As I understand it, last year it was 11 or 12.
Yeah.
The mining industry needs to understand that in terms of talent, it is literally dying.
Yes.
I don't mean figuratively dying. I mean that my generation was the last generation for whom mining was a mainstream alternative.
Yeah.
Yep. Yep.
That presents unbelievable opportunities. Really, truly unbelievable opportunities. I mean, the challenge for young people now is that, unlike me, there's a shortage of mentors.
Yeah.
One advantage I have is that I got to hang out with all these truly spectacular geologists, all these truly spectacular financiers that I had the ability to have these guys tell me, sometimes over whiskey, what I was doing right and what I was doing wrong. The only challenge the young folks have now is that while the competition above them is gone, the mentorship that I enjoyed is gone too.
Yeah.
Yeah,
Yeah.
that is something that we have been talking about because that's kind of the point of our show, right? Is we want to talk to the people within the mining industry, but we also want to talk to more of like the broader public of like, hey, there's a lot of
Yep.
opportunity in mining that maybe the average person might have no idea about. And it's a simple like of you're going to school, maybe change your degree, maybe go into some geology, maybe engineering, because what I like to tell people is we're in a pretty AI-proof industry. We'll definitely utilize the technology coming online, but we're still going to need the people.
Yeah.
It's going to be difficult for AI to do a lot of surface work. You
Yes.
know,
Yeah.
it's
We still need boots on the ground.
Yeah.
the joke is that what we look for is resistive, and very often you literally stumble over it.
Yeah. Yeah.
AI probably doesn't stumble through Muscade quite as well as you two do,
Yeah.
and I think there's going to be lots of obviously massaging data sets
Yeah.
and looking for coincidence anomalies as an example. There's a lot of future for AI, but I don't think that. I think AI is going to be. Let's just say I think it's going to be challenged in the field.
Yeah. Yeah. Absolutely.
I can
And
see that.
yeah, we had a great conversation with Steve Enders a few weeks ago, and he summarized it very similarly. You know, great for data interpretation. He said amazing tool for targeting, but then the work starts, and somebody needs to go out and
Yep.
actually do all the work, and it doesn't do any of that. But you know, on the labor and education piece, he offered a glimmer of hope that was really good. He said that things are improving. He's seeing enrollments up. Now we're seeing some federal funding, at least in the United States, going into mining schools. So
Didn't they just add $100 million to mining schools recently?
yep, that
Yeah,
will be
100
divided
million.
among the
Yeah.
mining schools in the United
So
States,
that's
which
something.
is good.
That's something. That's a good start.
But there's still a massive gap because we're
Yeah.
starting now, and then there's this huge void to fill in the
Yeah.
meantime. So it'll be interesting to see. But tremendous leverage for those who do choose to be in mining and those who are already there, and the young people starting out. I mean, we struggle to keep good young geologists because they have so many opportunities right now. There's just the
I think you'll
world's
see
wide
some
open.
come home.
Yeah.
For the last when I remember in the early part of the decade of the 70s, the joke in Denver is if you wanted to find a geologist, just go look at Home Depot. You know, and anybody with a good science background could become a coder.
Right.
It would appear that we may have enough coders now.
Right.
And I think that you may see economics dictate some people coming back. Further to Steve Enders, he's exactly one of those kind of mentors you want.
Yeah.
He didn't have to go to work at the Colorado School of Mines.
Right.
He had made plenty of money at Newmont, plenty of money at Phelps Dodge, and then made plenty of money at Kuprick.
Yep.
He did it truly out of love. And it's worthy to note that every year he takes a bunch of wrong phrase, old man talking. He takes a bunch of young future professionals from the Colorado School of Mines and takes them to PDAC so that they get precisely the type of mentoring that they need. Wonderful human.
Yeah.
That's
I didn't know.
awesome.
Yeah, you didn't mention that. Our conversation was much too short. We had so much ground to cover, but yeah, that is it. You can tell like the passion is there.
Yes.
And that's really what we need. And fortunately in the industry, there's qualities about it that are addicting and exciting, and so we do have a lot of the older generation that are still just as passionate as they ever were. And so when you can find them and they have the time and they're willing to give us time, we learn so much. I mean, it's really a gift.
Well, I look forward to participating in that to the extent that I still can in my return, my remaining time on Earth.
Oh, you're doing plenty, getting the word out there. I mean, you're a household name in investing in natural resources, and in turn, the mining industry follows you a lot, and so you're definitely contributing plenty. I think gives
Thank
the
you.
rest of
You
us
inhabit
something
some strange houses.
to aspire to. Yes, indeed. Yeah, I mean, talking about PDAC and some of that, yeah, and we definitely make it to Roundup every year and have some fun with that. But yeah, so kind of a big picture take from the angle of the mining industry. What are some things that we can do right now to position ourselves to have the biggest impact on these demands for minerals that are coming?
I think in public markets, uh, and it's more the fault of guys like me than folks like you, we need fewer companies.
Wow.
The level of general and administrative expense relative to the amount of capital that goes in the ground is scandalous.
Huh.
Not problematic, scandalous. I had a young intern, that's finance speak for slave, some years ago, and very bright young guy, Colorado School of Mines guy, by the way. And the truth is, I was having trouble keeping stuff for him to do, keeping him out of my office so I could do my work.
Right.
And so I told him to pull 25 TS6V companies at random, get 5 years of quarterlies, balance sheets, income statements, and look at them and tell me about the most important trend. He asked me what I was looking for. To be honest, I wasn't looking for anything. I was just looking to get him out of my hair, but also to see the way this young guy thought. And about a week and a half into it, he calls me and says, "Okay, I got it," which I thought was interesting because I didn't know what there was to get. The median of the 25 companies was about 62% of the capital raised went to general and administrative expense,
Wow.
and 38% went in the ground. Now, if the three of us formed a prospect generator and we sold a prospect to Newmont and we operated for them, they'd probably give us a 12% G&A allowance.
Right.
So 12% G&A at the industry level and 62% G&A at the public company level tells you all you need to know about the returns experienced by investors in the junior sector over the last 50 years. And we need to address that.
Yeah.
I think a second thing that we need to address in public markets is the focus on near-term share price as opposed to discovery. There is an overwhelming tendency when a public company takes on a project, probably a project that failed in the last 4 cycles, to twin an existing hole,
Yeah.
which tells you nothing.
Right.
There is much more emphasis paid on taking a 10-cent stock to 17 cents,
Yeah.
perhaps doing a big enough financing that one's salary is taken care of for the next year, as opposed to discovery. By the way, I'm not opposed to stocks that go up at all. And I'm not opposed to managers paying attention to their cost of capital, which means paying some attention to the share price. But the game is discovery.
Right.
And if the investment community had a better sense of discovery relative to share price, and if your part of the industry, if the technical part of the industry understood that there's some money that isn't worth taking, which is to say, if you go to work for Bay Street, as opposed to trying to make a discovery, you're raising money for no useful purpose.
Right.
It may pay your salary. I mean, it may take you to a good fishing spot in Northern Ontario or something like that. But the probability of you making a discovery, if you are shackled to, in effect, drilling fraudulent drill holes, means that you raise the money for no purpose.
Interesting.
It's a lot of wasteful money.
Yeah. No, it's yeah, we see a lot of the twinning of holes and things like that, and chasing news flow. Everyone's chasing
Right.
news flow, and they need that, and so we see a lot of that. But thinking about there being too many companies and too many dollars spent on not discovery is interesting. That's something I don't think about often, but yeah, there's a
Well,
lot.
the industry hates to hear about it. I would suspect I've heard quotes that there are 3,000 junior mining companies worldwide public. I suspect 2,500 are valueless.
Right.
Now, obviously, the managements and the shareholders, frankly, of those valueless companies would prefer that they didn't return to their intrinsic value. But it would be better for the exploration industry as a whole and the investment industry as a whole if all those listings went to listings heaven.
Yeah. Yeah. Yeah.
Interesting.
That is interesting.
That's an interesting perspective, and it makes a lot of sense when you explain it. We see a lot of waste in the junior markets. I mean, that's where we live. We're on the exploration front, right? We help.
Sure.
We help the junior exploration companies find greenfield deposits. We're the boots on the ground kind of people.
Yep.
It's an expensive part of the journey, right? I mean, all of exploration is so stinking expensive, and we do our best to be, to use our clients' dollars wisely.
But yeah, I think concentrating more dollars into better companies would unlock a lot more potential for discovery and increase the odds of discovery.
Right.
Versus just throwing it all out. Because yeah, I mean, we look at projects all the time that have merit, but they require some real discovery work, maybe some structural understanding, some geophysics, and then taking a risk on one super deep, expensive hole to actually, confirm, is there a porphyry here or something else? And we're finding that juniors won't do that anymore because it doesn't give them enough news flow, and it's the work that needs to happen. So they'll try to tee it up and get a major to come in and do it, and they're starting to. We're starting to see them take a little more risks on that stuff, but yeah, generally it's let's do some channel sampling where we've done it before and confirm or re-assay some pulps or something just to keep the deal flow going. And so on top of that, just administrative and overhead, there's an extra buffer of duplicative work that's not needed.
Or buying new projects with zero due diligence and just paying top dollar for them. We're
Just
seeing
to
a
get
lot of
that,
that
yeah.
lately.
In the United States, there's a big scramble right now of Australian in particular and Canadian juniors to acquire projects in the United States. And they're just buying anything with almost
Correct.
zero due diligence. And they're so diluted in the amount of projects they're trying to develop at the same time that none of them are making any real advancement.
I think that goes to the narrative. People are suggesting that the United States is going from anti-mining to pro-mining. We'll see in 2 years whether that's true or not.
Yes.
The mining companies obviously love dumb money,
Yeah.
and there's no money as dumb as government.
Right.
That's the dumbest money of all times. So it's attractive, but I think it also goes to narrative as opposed to prospectivity. You all technically may prefer to work in the U.S. as U.S. citizens, but it's interesting to me that people would rather look for copper porphyries, as an example, in Arizona, where lots of smart people have been looking for them for 100 years,
Yeah.
as opposed to Kazakhstan, someplace that hasn't been prospected by any means more sophisticated than a pick and a mule
Yeah.
since the beginning of history. People, I think, need to address that. I think a lot of the junior movement of the U.S. has everything to do with narrative,
Yeah.
because, as you suggest, they aren't being too selective in terms of what they pick up.
Yeah.
I would suspect the cynical side of me, which is most of me, suggests that what they are prospecting for is salaries.
Yeah. 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 I mean, there's no other real explanation for a lot of it. I mean, there's some general things. I mean, some of the strategic metals projects and things. I mean, we could use an antimony mine in the United States. That'd be great. We could use a tungsten mine or two, but we don't need 40 of them.
Well, have no fear. We aren't going to get 40 of them.
Right.
We're going to get 100 stories.
Yeah.
And out of 100 stories, we may get one mine. I'm not sure, frankly, that the antimony cares where it was produced.
Right.
I'm not sure that there is greater utility to American vanadium, tungsten, or antimony, but I'll leave that to the big thinkers.
Right.
And by the way, I don't think the U.S. is necessarily a bad place to explore. Resolution tells us that despite the fact that Arizona's been drilled pretty hard, it still gives up copper. 4 Mile tells us, despite the fact that Nevada's been drilled pretty hard, it still gives up gold.
Yep.
But I think that has less to do with the flood of foreign juniors into the United States than the ease of separating U.S. investors from their cash as a consequence of new U.S. policy.
Yeah, that makes sense. And it is definitely narrative driven for sure. I mean, all of that. Yep, there's a good story and let's sell that story primarily, and then we'll back it up with whatever technical details we need to. Along those lines, you talk a lot about it's 1 in 3,000. I think it'd be interesting, since we're kind of on the technical side, to break down kind of where those projects fail and what that funnel looks like.
Well, I was going to ask you the same thing. By the way, that wasn't my number. It was a number I was given in second year in 1971. So that number's a little dated. It's probably got worse.
Yeah.
It probably, a lot of the low-hanging fruit, the stuff that we could literally stumble on, we stumbled on, know. But I thought it was an interesting statistic. 1 in 3,000 mineralized anomalies becomes a mine, which suggests that the average Howe Street or Bay Street equation is that you take a 1 in 3,000 chance for 10 to 1 return.
Yeah.
It makes the lottery look like a really good deal.
It does. Yeah.
There's a lot that you can do to change the odds in your favor. I think the most important of which is represented by Pareto's law, the so-called 80-20 rule. Well, God knows how many people are involved professionally in exploration worldwide, a couple 100,000. There are people who have been repeatedly part of successful teams. And success does not conformably align. And in my experience, betting on the serially successful performers, if they're engaged in a task that closely resembles the task at hand, is really, really, really important. I had the really good fortune in the middle of my career to get to spend a lot of time with David Lowell. I mean, either he was kissed by God,
Right.
which could be, he was a lovable guy, or he was capable of surrounding himself with teams and motivating teams that did unusually good work. Irrespective of how it happened, we began this discussion around the Lundins. Serially successful.
Yeah.
When I look back at my own career, if I had, after age 40, only taken phone calls from people who had made me money in the past, from the Robert Friedlands of the world, the Ross Beatties of the world, the Bob Quartermains of the world, the Adolf Lundins of the world, I would have worked a quarter as hard and probably made twice as much money.
Yep.
And I think the first way that you begin to deal with the 1 in 3,000 risk is that you deal with the human risk. People hate that because it's elitist.
Right.
It's also true.
Yep.
And it isn't just that 20% of the people generate 80% of the utility in any given task. It's a bell-shaped curve, so it becomes more elitist. A different 20% of the population generates 80% of the aggravation.
Yeah.
And you can sure see that in junior stock promotion.
Oh, yeah.
What is maybe even more interesting to me is that if the task is large enough, like say exploration, the performance dispersal curve conformably aligns. So if you take that 20% lip, either the good lip or the bad lip, and you run it through the same performance dispersal curve, you will learn that 20% of the 20 generates 80% of the 80, or 4% of the population generates 65% of the positive utility. What I've learned over 50 years is that it conformably aligns at least one more time,
Wow.
which is to say that 1% of the explorationists generate something like 45% of the discoveries.
Wow.
I think that's important.
Yeah. Yeah.
I also think, and this is going to be very controversial, but I think scale matters a lot. When I was a young man as an entrepreneur, I fell for the small mine fallacy. The guys were going to find a small high-grade deposit, and somehow that their skills in exploration were going to extend to mine construction and mine
Yes.
operation.
Yes.
False. But that they were going to use the free cash flow from that small mine to grow BHP from their bootstraps over 20 years.
Yeah.
Wonderful, 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 seductive story. And total bullshit.
Yeah.
It doesn't work.
Right.
Everything that could go wrong with a big mine could go wrong in a small mine, but a small mine can only ever make you small money.
Yeah.
So why would you take big risk for small money?
Right.
That's a good point.
Yeah. Yeah.
It's silly.
Yeah. We
And
run
I think the
into.
third is probably political risk.
Yeah.
I've had extraordinary luck in places that were regarded as very rough, but they were prospective. And I've decided that I would rather have a discovery that was worth stealing than a discovery that wasn't worth stealing.
Yeah.
I've also learned that old, fat, bald, white guys like me discount political risk that's perpetrated by other old, fat, bald, white guys. So, like the national energy policy in Canada, when the energy prices went up,
Yeah.
and they in the United States had excess profits taxes, that's nationalization on the installment plan. But it was done to me in English, according to the rule of law, by guys who looked and sounded like me. So I was less afraid of it.
Right.
The worst experience with political risk, real experience with political risk I ever had in a monetary sense, was discovering the Castle Mountain mine in California. The People's Republic of California, as I call it. We made that discovery 7 miles on the wrong side of the California-Nevada line.
Yeah.
And the consequence of that is that we were 13 years and $16 million in bribes to obtain a permit. Now, these weren't efficient bribes like in the Congo.
Right.
These were deeds in lieu, studies, lobbying, campaign contributions, but they were bribes nonetheless. It's interesting that there was a 13-year delay in cash flow. At an 8% discount, what that means is that the net present value of the deposit was extinguished for shareholders,
Yeah.
and they were charged $16 million for the privilege.
Yeah.
Having lived through this, when people describe the political risk that I've endured in places like the Congo and Indonesia as being excessive, I need to say, really? Really? If money is stolen from me in the traditional sense, perhaps at spear point, that money is no more gone than when it's stolen from me by the legislature.
Yeah.
So I'm myself very inclined to take particularly misperceived political risk. That isn't to say I haven't been stung by it. I had 24 extremely good years in Russia, followed by one really bad year.
Yeah. Yeah.
The bad year sticks in my mind, but now I have come to understand that the bad experience I had was a rounding error on a net present value basis to the 24 good years I had.
Yeah.
Similarly, the money that Congo gave me wasn't easy. Going in there in 94, 95, 96, when 2 million people died, exposed us to real risk,
Yeah.
real risk. But it exposed us to real risk around, as an example, Kilomoto, which ended up being a 30 million ounce gold deposit, and Tanke-Fungurume, which was at the time the best undeveloped copper deposit in the world. In other words, it was a risk worth taking.
Right. Perspective, yeah. Interesting. Yeah, you've got me thinking about all sorts of different things. But yeah, I mean, California is the worst. We avoid it at all costs with our clients.
I agree.
And we
I
do
agree.
work there, but it's very minimal, and yeah, it's difficult. But it's funny you mentioned the small mine fallacy. I have a colleague that I've been working with who's long, illustrious career, and he's had some major successes and a lot of major failures, but he's still in love with that idea of we're going to start a couple of small mines, small high grade. We're going to use the cash flow to do exploration, put together other stuff, and we just don't see it. We've just
Let's
never really
look
seen
at you
it.
guys as explorationists. Let's assume that you got lucky, right? And you hit a nice small high grade deposit, and you decide that rather than doing the right thing, which is sell it and go
Right.
back to what you do, that you're going to use your geological expertise and you're going to become builders. How much do you guys know about building mines? But assuming you suffered through it without going broke, now you're going to operate it. It is unlikely that the skill sets needed to find, finance, permit, build, and then operate a deposit can be found within one small company. It's
Right.
highly unlikely. And if you're like me, if you think that success has to be evidenced that's related to the task at hand, that's a deal breaker. Maybe you have Agnico Eagle, which can do all those things, right?
Right.
They regard themselves as a construction company with an engineering department, an exploration department. In that wrapper, maybe you can do all things, although not many major mining companies can either, actually.
Right.
But the idea that a small company can is questionable at best.
Yeah.
Agreed.
Yeah, the amount of skill sets required, and just the stepping into realms of experience and assuming you can figure it out and know what to do, it just gets you in trouble with everything.
And should you?
Right.
If your place in the ecosystem is finding things, why should you step out of the place where you're better than other people?
Yep.
Right.
When I was a young man and reasonably successful in extractive industries, I decided that meant that I was a good investor and a good businessman. And I began to get into other industries unrelated to any expertise I had. And I got fairly thoroughly spanked. And as soon as my desire to be spanked ended, so did my adventures outside my area of interest.
Yeah. Oh yeah.
We can
lived
share that same sentiment.
We've lived that.
Yes.
Yeah.
It's stick to your lane. You have a good team. Stick to what you're good at. Do that. Be the best at that, and then hire out. Find other experts who can further advance. Yeah.
Well, and I think back to your point earlier about the Pareto principle. The further you get into that 20%, the 20% of the 20% of the 20%, you get further into there, the amount of value that you'll gain for yourself and those around you as you get better is asymmetrical to what you would get by diversifying and trying to do a bunch of other things. So it's just about efficiency of your own time as well.
There are some people, Ross Beatty comes to mind, whose expertise is forming and evolving teams over time.
Yeah.
But those people are very scarce, and you need to understand that as a unique talent too.
Yeah.
Although there have been successes, there haven't been many, which makes it the exception rather than the rule. It at once attracts you to the Ross Beattys of the world, but it also lets you know that there's not very many.
Right.
I remember Jim Bob Moffett saying that at its heart, Freeport was an exploration company, that they had discovered such fantastic deposits that even they couldn't screw them up. And I remember him saying that for Freeport in the Gulf of Mexico in the oil and gas business, that exploration was a 35% internal rate of return business, albeit lumpy. while production was a 10% internal rate of return business, although smooth. He quoted Buffett as saying he preferred a lumpy 35 to a smooth 10. And he said of himself, if I had any courage, I would monetize all of my investment successes, recycling that 10% money into a lumpy, risky 35.
It makes sense.
Takes
It
courage,
makes
but
sense.
makes
Yeah.
sense.
Yeah.
Yeah, definitely
Yeah, and
courage.
it does take courage, for sure. Yeah.
Yeah.
But yeah, the smooth,
And patience, I would imagine, too.
and that there's a huge reward when you get a mine operating and you smooth out all the bumps and you've got a large ore body and you can keep mining. But getting there and that's why we have an ecosystem in mining. There's the prospect generators and the juniors and the major juniors and then the majors, and they all fit and do what they do well. But it's interesting because I think, as we discussed earlier, there's parts of it that are too lumpy and parts of it that are less efficient than they should be. And but it's interesting with high tides raise all ships. We're seeing a lot more exploration across the entire sector, good and bad. We're seeing the majors taking on more greenfielding and exploration, mostly in Arizona, I'll admit. We're seeing
The West.
the juniors, we're seeing everybody else, but we're also seeing bottlenecks when it comes to things like rig availability and labs and things like that, which is always slows things down. But unfortunately, I think in the critical minerals space in particular, when we talk about things like antimony, tungsten, rare earths, things like that, I mean, that 3,000 to 1 could broaden to 10,000 to 1. I mean, it could be.
How many experienced rare earth explorationists are there? I mean, what's the chance of finding a serially successful rare earths explorer, particularly one with an Anglo-Saxon sounding last name?
Right. I was going to say there are in China.
I was
I'm
gonna say, we
certain.
go to
I'm
China.
certain in China there are some, but outside of that, yeah.
Yep.
Yeah.
Yeah.
Or any of those critical minerals. I mean, they're and I see a lot of people on LinkedIn popping up that they're experts in processing rare earths and different things. And then I look and they were, at a software company 2 years ago.
Right.
And yeah, I think to become an expert in something like that takes a little longer than a couple of years.
I have a friend, Dave Wargo, who's the CEO of SCP Capital Partners, a Toronto-based investment bank. He was part of the original team at Neo Materials, and he goes way, way, way back in rare earths and processing. And when I talk to him about things, I'm amazed at how much he knows. And he said, "Rick, what's scary is how little I know."
Right.
He said, "And if I'm the expert, the industry's in real trouble."
Yeah.
Which I thought
maybe,
was, refreshing humility. It'll keep him from making too many bad mistakes.
Yeah. Yeah, maybe that's the sign of true when you've really reached expert status, is when you really realize how little you actually know.
Yes.
Right.
and understand it. And we see that quite a bit. Yeah, which is interesting. Well, I think we're coming up to the end of our time here. I'm just seeing if I had any burning questions. I think we covered a lot of it pretty well. I wanted to ask about, geologists now and how the industry's starting to gray out, and what should a 22-year-old know and consider going into exploration today. And I think we covered that well. The blue
get
sky,
into
wide
mining.
open,
Yeah.
go get your boots dirty wherever you can, and the
And
opportunities.
get
are
mentored,
huge.
Get mentored.
Get mentored.
Get mentored,
for
yeah.
sure.
No, I think we covered it really well. Yeah, and the mentors. I mean, what kind of advice do you have on that? We can end with that. Parting advice for somebody who's newer to the industry or at any stage of the industry and they're looking for mentorship. How would you recommend they go about that?
I think you should Google Rick Rule and mentoring. I've done 2-hour-long lectures on that.
Oh, fantastic.
I don't have time to go all through them. I benefited myself extraordinarily as a young man with mentors. I have no idea why the Seymour Schulichs of the world spent all the time with me that they did, but they did. Maybe I do have an idea, but we don't have enough time to go through it. But I think it's absolutely critical. A lot of time in the field, so you know what the rock packages look like when you see them. not in the text,
Yep.
and a lot of time spent with people who've been in the field. Uh,
Yes. Yeah.
you could be pretty sure if your prof drives you up to an outcrop that outcrop's going to run. You don't actually need to take a sample because they drove you there.
Right.
Maybe get up on top of the truck, look at the way the side hill looks, try to imagine how the deposit got formed, stretch yourself a little bit, talk to the old timers about how they came to the outcrop. I think that's where I'm going with this.
Yeah.
I like that.
I like that a
that
lot.
Yeah.
Yeah. Yeah. And, with the mentorship, I think anyone who's become successful can recognize the early signs of success in others. And I think there's some joy and satisfaction in recognizing that and kind of helping those people along. I think that's why a lot of people get into coaching sports and things like that. I
Right.
mean, especially for amateur teams, high school, things like that. I think they enjoy finding and fostering talent, and it's a good way to give back. But yeah, I mean, just getting your boots dirty at the end of the
Yep.
day. Well, I really appreciate it. This has been great.
Well, my pleasure.
Yeah,
Thank you.
we really enjoyed having you on, and would love to do it again sometime. Really appreciate it, and we'll see you next time.
As you wish. I look forward to it.